So I want to show you this form first, and this is a Schedule CEZ. This is also known as the short business form. So write that down: the short business form, Schedule CEZ, and you're gonna be able to see that it's a little similar to the Schedule C, to the long form, but you know, we're going to figure out today why is it called a short form, and this is very important for you to pay attention to, because I see a lot of preparers wasting a lot of time creating the wrong forms just simply by not paying attention to, because you didn't pay attention to class. But we're going to make sure you're prepared here. So here we go. We're going to talk about, for the next 10 minutes or so, we're going to talk about net profit from business, but we're going to talk about it on form Schedule CEZ, right? So write that down. You know, if you can, write it down, Schedule CEZ, and also right next to it, call it the short form. So here's the most important reason why it's called the short form, and it's right here on this first bullet point. If you're going to use the short form, it's because you have $5,000 of expenses or less. So that means that the IRS, if you have $5,000 of expenses or less, the IRS is not going to be too concerned as far as detail. They're just going to tell you, they're just going to ask you to put in your income and put in your expenses, and it's done, right? You're basically done. There's nothing else. There's not much else to do in this form. This is why it's called the short form. It's gonna have some similarities to the actual form, to the big form, in the case that it's going to ask you for things like, you know, letter A, like business name or profession. It's going to ask you for a business code. It's going to ask you if you have it, to enter an EIN number. And let me begin here by saying, if you're filing any of the personal business form, you are not required to have an EIN. You know why? Because you already have a Social Security. Let me say that one more time. If you are using a personal business form like a Schedule CEZ, you're not required to have an EIN, because you already have a Social Security, and everything you do, it's going to go in your personal record with the IRS. So it doesn't matter if you have an EIN or you don't. So what I said yesterday is a good practice. It is a good practice for you to have an EIN, but it's not required when you're filing personal business forms. So here you go: business name, business address. This is all simple stuff. And then letter F and G are going to ask you about Form 1099s, and I'm gonna explain this to you here, but I'm also going to remind you when we are talking about Schedule C. But if you read this question, if you read letter F, did you make any payments in 2016 that require you to file Forms 1099? Basically, what the form is asking you, and you should make this note, is, did you make any payments to contractors, to people who worked for you, to did any work for you? Did you pay them? And if you did you file the forms with the IRS? So if you look at the letter G, it's asking you, if yes, if you did pay someone, did you file or will you file the forms with the IRS? Remember this, and I want you to make this note. If you are going to if you're going to pay someone, if that someone is a contractor, then you pay that someone, and then you give that someone a 1099 at the end of the year. 1099 miscellaneous, right? One of these forms right here, right? If, for instance, you know, if you have been a contractor before, or you are an employee that were treated as a contractor, or vice versa, then you receive this form right here, and then line 7 had the money, whatever money they paid you right here on line 7. So this is what the form is talking about, because if you're an employer and you are or if you're a contractor and you have subcontractors, then if you pay those people, you need to give them a form at the end of the year if you want to claim the deduction. So one more time, if you want to claim the deduction of employee or contractor expenses, you need to make sure you give those subcontractors Form 1099. So this is what the questions are about here. Did you make any payments? Yes. So if you did you file the forms? All right. So if we go to part 2, as you can see, this form is broken down in 3 parts. Part 1, which is general information. Part 2 is going to be figuring out your expenses, right? Your net profit. So it's very simple. As I told you earlier today, this is called the short form for a reason, and I'll show you here simply. We have let's say that we had $5,000 in income from this business, and then we had $3,000 in expenses. So that means that I have a net profit of $2,000, right? So remember, the key thing for this form, the key factor for this form is line 2. Here, let me undo this. Line 2, and line 2 is asking about expenses, right? Because if you have more than $5,000 in expenses, you need to report your expenses on Schedule C so that you can break it down. So this form is fairly easy. The reason why I'm showing you this form is because I don't want you to do a lot of work when you don't have to. If you have a customer that has an example like this, right? $5,000 worth of income, $3,000 in expenses. There's no need to break down the expenses. You can just come to this form, Schedule CEZ, and do what I just did. Just this number right here. So this is what I'm going to show you. All I'm going to show you on this form, because we need to quickly move on to Form 1040, Schedule C. And as you can see on this form, there's Part 3 and information on vehicles. But I'm not going to show it to you here. I'm actually going to show it to you in the other form, because it's essentially the same, like the same lines, the same questions, exactly the same. So that none of those questions on Part 3 are going to change from this form to this form right here. So I'm not going to show you vehicle information here. I'm going to show it to you on the next form. So all right, so if you want to take something away from Schedule CEZ, number 1 is easy, very simple to use, not a lot of questions. Number 2 is you can only use it for customers who have business expenses of $5,000 or less. It doesn't matter. It's not talking about income. It's talking about business expenses, because the IRS it's wanting you to break down the expenses if you have more than $5,000. Perfect. So there you go. You have Schedule CEZ. Remember that you can find this form in your materials. Hopefully by now you're on day 6. You should already know where your materials are. If not, you can also find them in the other folder where all the videos are. So you'll find all the forms there. And also you're going to find your study guide for this week, and you're going to find the videos for the class. So yesterday's videos are already uploaded to that folder. Perfect. So let's talk about Schedule C, and this is the actual form. So this is going to be, I want you to write this down. Please write this down. Schedule C is an attachment. It's an attachment to Form 1040. So Schedule C, as you can see, it says Schedule C, but down below it says 1040 still, because it's an attachment to the form. Okay, it's not a separate form. It's not something that it's not something that something extra that a new tax return that you have to create. No, This is an attachment to the form. So what I want you to keep in mind is the last week you had learned how to do exemptions, you learned how to do credits, you learned several personal forms. You essentially learned how to do an income tax return last year, right? I'm sorry, last week for personal income tax return. So all you're learning now is how to add the business part to it. And then next week, we're going to put it all together. Next week, we're actually going to get into the system. I'm going to show you Monday and Tuesday how to get into the system and get things, done in the system. And then Tuesday, Wednesday and Thursday, you're going to get into the system. You're going to do practices, and you'll see how everything comes together. So here's what I want you to know about Schedule C. Before we go any further, I want you to make these notes. Number one, you need to have, and this is going back to what we learned yesterday. You need to have documentation. You have to have proof. Okay. Not only proof for the expenses, but proof for the income. So if the customer is not able to show you proof right there and then, you can say, hey, Mr. Customer, let me ask you this question. Are you sure that you have all of this proof? Everything that you're trying to report right now, are you sure that if the IRS comes to do an audit on you, can you prove everything? And if the customer says yes, you're going to give this customer this template right here. You're going to give this customer this template. We're actually going to provide you this template. So here's a few things that you need to know about this template. Number one, you yourself cannot write on this template unless you are the customer's accountant. Let me say that one more time. You yourself, you cannot write on this template. You cannot create this template unless you are the customer's bookkeeper or accountant. Because if you are the customer's bookkeeper and accountant, that means that you know what the expenses are, you know what the income is, you are processing all that money, all those expenses. But if you're not the accountant or the bookkeeper, then you don't know any of this, right? You are going to rely on what the customer is telling you. So you don't want the customer to later on tell the IRS, oh, well, I don't know, look at the handwriting, right? I didn't make that paperwork. She did, or he did, and I didn't make the numbers up. He did, and then she said that he or she, the preparer, is going to be accused now of fraud because the customer is not taking responsibility. So therefore, you don't want to write on this. You're going to give it to your customer, and yes, we do also have it in Spanish. You're going to give this to your customer, and you're going to say, Mr. Customer, write your income in here, right? Here's where your income goes. I can show you how to do it, but I'm not going to write on it. And then you can write your expenses over here, right? Just use this list to write all your expenses, right? If you have repairs, if you have anything, and then at the end, you're going to total that for me, okay? So at the end, you're going to total that for me, and then we're going to figure out your income. But I cannot do this for you. I can do math. I can help you use the calculator, but I cannot write on this form because since you're not providing me the actual receipts, you have to provide me a summary, and that summary cannot be handwritten because if in case of an audit, I ought to be able to prove to the IRS that you gave me this and not that I made this with my own inventions, right? With my own creativity, right? So at the end of the template, you're going to see a very important message, right? And that message says the customer is signing this, and it says that by signing this document, I am responsible for the numbers reported on the form. At no time was I pressured or instigated for the purposes of committing fraud against the IRS or the United States Treasury. D&J Financiero, its franchises, and its registered members are not responsible if I reported information without having the necessary proof. Who's signing this? Who's going to sign this? The customer. Please, please, please do not sign this. Do not write on this. Do not be that person who thinks that the IRS is not going to find out, because guess what? You're going to run out of luck one day, and then the IRS is going to find out, and then you're going to be in trouble. So let me tell you why. Let me tell you what we use this for. We use this for number one, to make sure that the customer feels that this is not a joke, right? That this is important, that he or she reports the numbers as honest as possible, and that he or she should not be reporting anything that they cannot prove. And also, if the customer lied to the IRS, there's no way for us to know if the customer lied to the IRS. We can give this template, we can give this paperwork to the IRS as proof that we did our job. And our job was to collect numbers from the customer. And then the customer signed down below saying that we did not pressure him to write any numbers. We did not write the numbers for him. We didn't do anything. He provided all that info for him. And that is something good for you, because now the customer cannot accuse you. Now, if the customer says, hey, I have never seen that form, I never signed that form, the IRS is going to ask you to go through a test, and a handwriting test. And if they can prove that the handwriting on this form is yours, yes, you will be in trouble. So again, I'm telling you, do not write on this form. Give it to the customer. I'd rather not do the service than if a customer refuses to sign something like this, that means that the customer is hiding something, right? So it's trying to do something illegal. So all right, so I wanted to show you this template because you are going to have access to this template during tax season, and this is going to be your best friend. Anytime you have a Schedule C, and the customer cannot provide you numbers or proof, you're going to hand this document over to this customer and tell him to fill it out, and whatever numbers he writes in here, we're going to use for the tax preparation. So, yeah, all right, so let's go back to Schedule C, and we're going to, as you can see, and I'm going to fill out this form with you as we go through it. And as you can see, the form is very similar to the one I showed you a few minutes ago. So I'm going to say D&J Financial. This is the name of the proprietor. I'm sorry. I'm going to say Josh Albayero, and then Social Security, Social Security number. You see why I don't need the EIN, right? Because everything's going to go under my social anyways. Principal, business, or profession. I'm going to tell you something. Income taxes is very easy. It's really about reading. So I can't tell you how many people put the business name here just because they don't read. It says business, principal, business, or profession. What is this business about? What does the business do? And I'm going to say, for this example, landscaping. Right? That is the profession of this business, not the name of the business, not anything else. The business profession. That's what we do, landscaping. And then we're going to have business codes here. I don't want you to worry so much about the business code. If you don't know the business code, we're going to provide you with a long list of business codes. But if you don't know it, you can just write 99999, and we will take care of the business code. All right, now the business name, D&J Financial. I don't have an EIN number because I also don't need one, so I'm going to leave that blank. And my my address is the same as my personal address, so same as personal address. So the one thing I'm going to tell you here is that you're going to, in the system, you're going to have a button, and you're going to push that button, and the address is going to populate here. Whatever address you have on the main information for the customer, that address is going to populate here. Okay. So yesterday we talked about accounting methods. Remember that. Yesterday we talked about accounting methods, and you can see this now. You can see it right there. It's asking us what accounting method are we using for this customer. So so who's the best person to answer this? No one else than the customer himself or herself. So my accounting method, as I told you yesterday, most of them, 80% of them are going to be cash. All right, cash. And then I go to the next question. Did you materially participate in the operation of the business? This is a very simple question. You know, a lot of these questions are in plain English, right? So did you materially participate? What does this mean? Did you actually work in the business, or did you pay somebody else, right, to work in the business, right? Did you materially participate in the business? For the most part, the answer is going to be yes. Most customers for small businesses always participate or work in the business. There's no other employees. Letter H, did you start or acquire the business during 2016? You're only going to mark there if the answer is yes or no. So I'm going to say, I'm just going to leave it alone now because I didn't. Letter I, remember this right here, letter, did you make any payments in 2016? We just went through that. I'm going to say yes, I did make payments. I'm also going to say yes, I did send the forms to the IRS. So as a reminder, remember, anytime you give the form to, you give a form to someone, you have to send it to the IRS first. So let's say that I give, let's say that I work for Olga. Olga's going to pay me. She paying me $10,000, and then at the end of the year, she's going to give me a 1099 form. But that form needs to go to the IRS as well. So whenever I go and do my taxes, the IRS has the original form over there. So same thing happens to the W-2s. Before you get them, your employer has already sent that form to the IRS. So it's not just handing someone a 1099. It's about sending it to two different places, right? First, you send it to the IRS, and then you send it to the employee or the contractor. Perfect. So here we are. We have completed the basic information of Schedule C. We're going to move on to income now, Part 1. So income, Part 1. That's where we're going to spend the next 5 to 10 minutes. So we're talking about the Schedule C Part 1 income, and I have, as you can see on the screen, I have broken this down to the seven parts, and then the first part is going to be gross receipts, right? So gross receipts or gross sales, and then you're gonna have people saying, oh, you know, well, Claudia, I don't have any sales. I'm not a vendor. I'm a construction employee. Well, anything that's income. So, for instance, your 1099, and I'll show you here. What I'm gonna do is do this. Actually, let's go back and let me show you. So, gross sales or 1099s miscellaneous. Okay, that's please write that down. So on line 1 of the Schedule C, you're going to report your gross sales or your 1099 miscellaneous. Whenever the customer comes in with a 1099 miscellaneous, all right. So you're going to enter that there, and you'll see how that this is entered in the system. So you're going to have gross sales, 1099 miscellaneous, or simply you're going to have cash. All right. So one of those three things are going to go in there. Gross sales. And when I mean gross sales, I'm talking about. So you don't have cash, or you don't have a 1099, but you do have credit card reports or income that came in through credit cards, checks, and things of that nature. So in line 1, you're always going to put your gross sales, your 1099 miscellaneous, your cash. You know, so pretty much everything that came in, it's going to go on line 1. And then we go to line 2, and line 2 is going to be returns. Or if you want to call it refunds. So most businesses will have to do returns and refunds, meaning that you know, unfortunately, sometimes you have to return stuff, right? Customers have to return stuff. Customers come back and ask for refunds, and that comes back out of your bank account and you give it back to the customer, so it's not considered a sale, right? So in line 3, you're going to do nothing. Okay, nothing. So write that down there. I'm going to do nothing because the system is going to calculate, right? So system is going to calculate. I'm going to show you here in a second how that works. So basically, let's do this. Let's go ahead and make some numbers here. So what's going to happen is I'm going to say that my gross sales are $50,000. So there we go. I have a gross sales of $50,000. But unfortunately, I also had to pay out and I had to refund some money. So I had to refund $2,000 throughout the year. So I'm going to have on my line 3 the result, right, of this right here. So basically I'm going to have 48,000 here. And don't worry about it, the system's going to do this math, but you got to understand where's this money coming from, right? So that's line 1, 2, and 3. Let's go to line 4. And as you can see on line 4, we talked about cost of goods sold. So cost of goods sold. And what does that mean? What does cost of goods sold mean? My pen was doing really good and now it's starting not to do good anymore. There we go. Cost of goods sold. What does that mean? What that means is that so you could sell something, you have to buy something, right? So for instance, if you are a restaurant owner, your cost of goods sold is going to be your labor and it's going to be your food and beverages, right? So you're going to have to buy food and drinks to sell food and drinks, and you're also going to have people to prepare that, right? So that's your cost of goods sold, right? How much money did you spend to make your sales? So you sold $50,000, but how much money did you spend to sell those $50,000? That's basically the question that you're being asked there. What is your cost of goods sold? And so let's say that my cost of goods sold, most companies are not going to have a cost of goods sold. It's usually restaurants and things of that nature who have cost of goods sold. Most companies are going to have their cost associated with general expenses, but cost of goods sold it's a way of reducing your sales, right? And remember that you're going to pay income taxes on the net profit of this business. So I'm going to say that my cost of goods sold, or my cost to generate sales, was $10,000. Okay, so this is how much money I've spent to make this money. So you can understand it better. That's how much money I spent to make that money. And again, that is usually when you look at cost of goods sold, you're looking at purchases and cost of labor. So purchases and cost of labor. You have to purchase food, you have to purchase beverages to sell food and beverages, and then you also have to have someone prepare that food. So that's usually cost of goods sold. So, all right, cool. So that means that now on line 5, the IRS is asking me for a gross profit. Gross profit. And my gross profit is going to be this minus this, basically. That's what my gross profit. And again, don't worry about the math. The system's going to do it for you, but you need to understand where the math comes from. So 48,000 minus 10,000 equals 38,000, right? There you go. So that is Right now, tentatively, this is where I'm going to pay income taxes so far, right? So this is where I'm going to pay income taxes so far. I haven't finished yet. So, um, and then line 6 is called other income. So other income, right? So let's say that I had, let's say that I had a business, a very small restaurant, right? Maybe something from the house. Maybe I have a delivery service, right, from the house. Delivery services that comes from the house. So, uh, and I did $50,000 worth of sales, and I spent $10,000 to create those sales, and I had to give refunds of $2,000. So as you can see there, right, those are my major expenses right there. Um, but I also had other income from other things, like when I was doing catering, I was also selling alcohol, or let's not say alcohol. I was selling maybe ornaments, or I was selling food trays. I was selling other stuff, right? And as part of my catering business, I was also selling other things to my customers. So that becomes other income, because it's not my primary source of income. So I'm going to say that I took in $3,000 in other income. Okay. So of course, this plus this. So now instead of a minus, it's a plus, right? So instead of a minus is a plus. So we're looking at gross income. The IRS is now asking me for gross income of whatever this amount is here, which happens to be $41,000, right? So we said that I have $50,000, right? $50,000. And my refunds were $2,000. Here, let me fix that. 50,000, and my refunds were $2,000, which left me with $48,000. Here you go. Let's add the dollar signs if you want to be proper. And then my cost of goods sold happens to be $10,000. Okay, so that means that my gross profit right now is $38,000. My other income was $3,000. So that means that my gross income ends up being $41,000. So remember, I told you that in reality, you're not going to have to fill out every single line, because when you look at line 3, and when you also look at line 6, actually line 5 and line 7, those are going to calculate themselves in the system. So you don't have to do any math, and the system's going to do the math for you, so you don't have to do it yourself. So all right, so that is part 1. That is income. That's a very important part, because now the IRS is expecting you to pay taxes on those $41,000, right? So you have $41,000 right there. The IRS is saying, hey, you got to pay taxes on that. But we're going to say, no, wait a minute, I actually have more expenses, so no, I am not going to pay taxes on that. I'm going to pay taxes on whatever amount I have after my expenses, right? So let me clear this. I think we're fine. I just want to make sure that you're taking notes. So right now we have $41,000, and then we have expenses here, and expenses are on part number 2. As you can see, part 2 expenses. This form is actually broken down into 5 parts. We're going to talk about all 5 parts in the next 2 days, between today and tomorrow. But I just want you to pay attention to this part. This is a very important part, because this is where most people who get in trouble because they start making up expenses and things of that nature. So let me say this to you. I want you to write this down. Please write this down. When we talk about expenses, we talk about need, N-E-E-D, need, right? So do I need it is the question, right? Before you do anything else, talk about need, right? Do you need it? Was it a business expense? Was it because the business required it, because the business needed it, or was it because you wanted it? So that's what the IRS is going to ask you whenever they're auditing you, right? Hey, Olga, was it a business expense that the business really needed? Can you prove me that the business needed this, or was it something you wanted, right? Because if it was something you wanted, the IRS is not going to let you deduct it, right? And remember that when I say the IRS is not going to let you do, I'm talking about audits, because during tax season you can do whatever. But after May, June, July, August, you have audit season, and then you have to prove to the IRS that you did had the proof for all of these expenses. So what we're going to do is we're not going to focus on all of these expenses, okay? In detail, I'm going to write down on all of the expenses, but in detail, we're not going to focus on all of them because of time, and some of them are very simple, like advertising, right? My catering business needs advertising, so I ended up spending $1,000 in advertising, right? So again, I'm not going to cover all of this. I'm not going to cover all of these expenses, but in detail, but I'm going to go through them. So I spent $1,000 in expenses, in advertising expenses, and then line number 9, it's car and truck expenses. I also have car and truck expenses, but I'm going to wait. Okay, I'm going to wait, and I'm going to wait because the number on line number 9, it's transferred. So I'm going to write that down there. Transferred from part 4. From part 4. Okay. So once we get to part 4, you'll see that whatever number we get on line 4, we're going to have to bring it here. We're going to have to bring it here eventually. So I just want you to pay attention to that. Okay, so we have $1,000 there in advertising. So let's go to commissions and fees. Let's say that if I pay anyone to promote my business, and I paid them a commission, or maybe the person who's helping me sell the caterings, she works on commission. So let's say that I pay that person $2,500 in commission. So there you go. You have $2,500 right there. And then contract labor. Let's say that I had some people help me, and they only came and helped me for a little bit, and then I pay them. Or I hire some temporary workers and I pay them. So I spent $3,000 in contract labor. Okay. I'm not going to worry about depletion right now. I'm not going to talk about depreciation right now. We're going to talk about that tomorrow. So I'm going to say 0 here for now. I don't have any employees. Remember, this is contract labor. Contract labor. Those are not employees. I don't have any employees, so I don't have an employee benefit program. I do have insurance for the business, and I also understand that I cannot claim health insurance for anybody here. Not for me, not for anything else. And here's one thing that I want you to understand. Every single expense on line 8, every single expense on line 8, through 27 is a business expense, not a personal expense. This is not asking you about your medicines and your stuff. It has nothing to do with personal. Okay. So remember last week we talked about Schedule A, and that's where the personal expenses go. These are business expenses. All right. So insurance. Here in insurance you have let's say that I have a $500 insurance expense, mortgage paid to the bank. Again, we're not talking about the mortgage for your house, unless you work. Your house is part of the job, part of the business. Then you can claim a portion of it, but not all of it. So for this example, I'm going to say zero because tomorrow we're going to talk about business use of home. And then I have legal and professional fees. Maybe my accountant, maybe the person that's helping me, my tax preparer, $500 a year for for advice, for things of that nature. So let's move on. Then I have office expense, maybe paperwork, flyers, whatever the case it is. Anything that has related to the office. Let's say that I spend $200 on that. Pension and profit sharing, I don't because I don't have any employees. Rent or lease, you can. This is not just talking about a building; it's talking about machinery, equipment. So yeah, I actually had to rent some machinery or some equipment for my business, so I spent $700. And remember that I can prove to the IRS that I have all of this. And if I cannot prove to the IRS, or if I don't have all those receipts with me right now and I cannot prove them to you, then I'm going to fill this out. Before any of you can actually get in the system and start typing information, you need to have this filled out from the customer. That way you can use this to type the information in the system. All right, so let's go to line 21, and line 21 is repairs and maintenance. Repairs and maintenance, so I had to fix the truck. The truck broke down, and that cost me $800. So I spend $800 to fix the truck. And supplies, I have a catering business, so of course I need supplies. So throughout the year I spend, and I'm not talking about food and beverages. Remember, I already claimed the food and beverages here on this is supplies like maybe paper to go stuff and cups and all of that stuff, right? So here, let me fix this. All right, so let's go back to supplies, $1,000. Taxes, of course I pay taxes. I paid $2,000 worth of taxes so far, between sales taxes and all kinds of taxes, licenses and all of that stuff. I have $2,000 worth of it right here. Travel, meals, and entertainment. So I'm in a catering business. That means that I use my truck, that I use my van, that I travel. It means that maybe sometimes I have to spend the night over. Maybe there's a lot of expenses that I have. So the one thing that I want you to remember before we type anything, whatever amount you have, the IRS is only going to look at 50% of it. So I'm not telling you to cut it in 50%. No, put whatever number it is, put it in here, but the IRS is only going to look at 50% of that. So for example, if I say that my travel, meals, and entertainment are $1,000, then I'm going to write $1,000. But the IRS is only going to take into account 50% of that, so $500. So remember, 50% on travel, meals, and entertainment. So don't go and cut it in half yourself. Put the number in here. Let the system do the work. So that was 924, right? And that is, and look, it's actually broken down here in travel and meals. So let's say that traveling I spend $500, and then in meals I spend $500 as well, just to give you an example. Utilities, yes, I do have utilities. So let me actually update something here. So then we have All right, so utilities, I had another $1,000. Wedges are employee wedges. I don't, because I don't have employees. I didn't pay any employees, and I also don't have any other expenses. So I'm basically done here, right? I'm basically done. So I have, if you put it all together, I have $11,000 worth of expenses. So I have $11,000 worth of expenses right here. So line 28 is going to ask me for total expenses. Total expenses right there. Okay? And then line 29 is going to do the math. It's going to say this minus this. So 41,000 minus 11,000. That leaves us a net profit of $30,000, right? So you have $30,000 as a profit. There you go. So far. This is so far, because you still have to calculate your truck expenses. And we are actually talking about Schedule C, and we just finished, almost finished part 2, but we're going to actually go to part 3. So you're going to see that this form comes in 2 parts. There's part 3, cost of goods sold. And without confusing you, I want you to see cost of goods sold from line 33 all the way to line 42, and then here's cost of goods sold right now. Okay, cost of goods sold, and cost of goods sold is going to you're going to break down the cost here, but whatever number you have on 42 is actually going to report itself on line 4. Remember those $10,000? All right, well, let's go and tell the IRS how we came up with the $10,000, right? So let's go to part 3, which is cost of goods sold. This is where you tell the IRS what you bought, what you purchased, and how you purchased it, right? So I don't want you to worry so much about beginning inventory and any of that. I want you to worry about line 36, 37, 38, and 39. Those are that's where you need to worry about, right? Unless you're going to be running accounting for the customer, I don't want you to worry about anything else, okay? Of course, the system is asking us, so write this down: line 33, 36, 37, 38, and 39. All right, so here we go. So we have so the value of the inventory. If you are running cash, remember at the beginning of the forum we said that our accounting method is cash, right? Accounting method cash. Okay, so that means that my inventory value is always going to be a cost. Always, if it's cash, it's always going to be a cost. Okay, and I'm going to quickly come into my line 36, and it's asking me for purchases minus cost of items for personal use. So for instance, if I bought food, if I went to Sam's Club and I bought a bunch of food, about $500 worth of food, but out of those $500 I took 50 for me, for my house, or 100 for my house, then I have to make sure that I have those records to deduct. But I'm going to just give you a straight line example here, and say that my cost for food was $3,000. Okay, let's say $4,000. It was $4,000, and my cost of labor was $5,000. This is how much I pay the people to prepare the food. And materials and supplies and things of that nature was $1,000. Right? This is different. This is different materials, right, than the other materials that we just reported. So we're not repeating the cost. This is actually different. So here, let me make this change right here so you don't get confused. Let's say that we spend $4,000 in food, $4,000 in labor, and then $4,000 in materials and supplies. Materials and supplies, right? So zero other cost. And what I'm going to tell you is, like, try to stay away from other cost and other expenses and other this and other that, because anytime you're telling someone, the IRS, other this and other that, the IRS is going to want to know what the other is, right? Because It's older, right? It's not explained. So when I do math, when I do line 35 through 39, if I say 4,000 plus 4,000, that's 8,000 plus 2,000, that is $10,000. Okay. So I have here $10,000. Inventory at the end of the year, I'm going to say 0 because my inventory at the first of the year was also 0. So 0, 0. I'm not tracking inventory. I'm just tracking purchases. So that means that my total cost of goods sold is going to be 10 grand, $10,000, right? And what's going to happen is that line, and you can see it here, right? Especially for those of you who speak English and know how to read English, you have here the result. It's going to, whatever result you have on this line is going to populate itself on line 4. Here's your line 4. Whatever result you have is going to be on line 4 by itself. You don't have to do anything. Okay? All you have to do is fill this out, fill this part out, and the number is going to go straight. It's going to calculate itself straight here. Okay? So we don't have two amounts of $2,000. It's just one amount of $2,000. Okay? This amount on line 4 is the same amount on line 42. This is just the breakdown. All right? Perfect. So with that being said, we're going to move to vehicle information, to part number 4. And this is a very important part because there's a credit associated with it. Before I move to and before we start filling this out, I'm going to show you how to a few important things about the vehicle information. I'm going to, for that, I'm going to move back to the white screen. So you're going to see there, we're going to talk about Schedule C. So we're going to talk about Schedule C. Part 4, we talk about vehicle information, right? So we're talking about vehicle information. All right? And I want you to pay attention to this part because it's very important. You're going to help your customer obtain a deduction, not a credit, but a deduction. And for those reasons, you want to make sure that you know how to do it right. All right, first thing we're talking about is, can I deduct can I deduct personal miles here? No, you cannot deduct personal miles. So let me show you how this works. We're talking about business miles only. Okay, so we talk about business miles only. All right, let me show you how this works. This is your home. This is your home. This is your first customer. Okay, first customer. And this is your last customer. So first customer, last customer, okay? And then so you're going to do this, right? You're in your vehicle, you're in your car, and you're going to go to the first customer, right? Let's actually do one more customer here just to make it more fun, right? Just to make it more fun. Let's do second customer. So here's your, you go from your house to your first customer, to your second customer, to your third customer or last customer, and then back home. Okay? So these miles right here don't count. Those miles don't count because nobody gets paid to go to work. All right, nobody gets paid to drive to work. Not the president, not the senators, nobody. No one gets paid to go to work. So if anyone told you that, if anyone says, ask those people what is the tax provision, what is the tax law that allows you to, and I guarantee you that person is going to say, oh, what someone told me. Well, who? I guarantee you, if you ask the IRS commissioner, he's going to tell you no, that it doesn't work that way, right? So you're going to count the miles from first customer to second customer, from second customer to the last customer, and this right here don't count because nobody gets paid to go back home from work, right? It doesn't exist. It's not there, right? You cannot do it. So in reality, my business miles for the day are 30 miles. All right? In reality, business miles for the day are 30 miles. Okay? So let's say that I have 15 miles here, and then I have 25 miles here. Let me make a better example there. I have 25 miles here. Okay? So there I have 40 miles, right? So I have 40 miles here. What do we call those miles? Most of you know they're called commuting, right? So in English they're called commuting. So it's commuting to work and back from work, right? And commuting for work, you need to understand that that is not tax deductible, okay? It's not tax deductible. Just do that. Commuting from work to and from work is not tax deductible. You can only claim the business miles, all right? So you can only claim the business miles. I want you to pay attention to those 30 miles, okay? We just figure out that the customer drives 30 miles. An average, you know, he probably drives 30 miles. Let's talk about a taco truck, right? And then this taco truck, there's a taco truck goes to the same parking lot or the same place every day for the most part. So in reality, there's, you know, maybe they go here for breakfast, and then they go here for lunch, right? And then they go here for dinner. So once you figure all that out, it's 30 miles per day. That's what they drive, right? 30 miles per day. And so we're gonna figure out right now something really important. So I'm gonna clear this example. Hopefully you have the notes. I'm gonna clear this example and show you something really important. So we are talking about. Actually, let me do this. All right. Let's see if that works. We are talking about Schedule C vehicle, or what we call Part 4. Okay? That's what we're talking about today, right now. And what I'm going to show you is miles, right? You talk about miles, and there has to be a record. So there has to be a record of daily mileage, right? Or weekly mileage. How many miles did the customer drive? Who needs to provide this to who? The customer needs to provide this to you, right? You cannot tell the customer that he drove 200 miles a day because you don't know that. You weren't there, right? The customer needs to tell you. But let's be honest. A lot of these customers do not have these records. So what you are going to do is you're going to help the customer. You're not going to tell the customer. You're going to help the customer come up with an average. Okay? So let's come up with an average. Okay? So let's talk about average miles. And let's do this number right here. I want you to write these notes. The first thing you're going to do is say, request, right? Hey, Mr. Customer, do you have a record of miles? Yes or no? Let's say that the question is, that the answer is yes, then you get up and you give this customer a big hug because that's the kind of customers you want, right? But there's going to be a lot of customers that are going to tell you, no, I don't. So you're going to have to go for the average mileage or the average miles. So let's go and talk about your average miles per day. So your average miles per day. Average miles per day. I'm going to do this. Average miles per day. Okay? AMD, average miles per day. How many miles do you drive, Mr. Customer, per day? Well, I don't know, this and that. So then that's when you got to help him with the example I gave you before. Mr. Customer, from your house to your first place, first customer doesn't count. So let's start counting from the first customer to second customer, third customer, and then from the third customer to your house, it doesn't count. So whatever happens between customer number 1, 2, and 3 is what we need. Oh, okay. So that was 30 miles. Perfect. Awesome. So let me ask you this: how many days per week do you work? Days per week. Do you work 4 days, 5 days, 6 days? How many days do you work? Oh, well, in average, I work 6 days. Okay, perfect. All right, last question. How many weeks did you work in a year? Did you take any vacation? Were you not able to work because of weather reasons? Or remember, there's 52 weeks in the year, right? 52 weeks. And the customer's going to be like, oh, well, yeah, probably I didn't. I think I took a week of vacation, and then there was 2 other weeks where I couldn't work. And so all in all, I ended up working 48 weeks, right? So now you're going to say weeks. This is weeks per year. Weeks per year. So you have 48 weeks, right? Cool. So now you have some numbers. Now you can say 30 miles times 6 days times 48 weeks. It gives you 8,640 miles. This is an average. This is the average. Okay? This is an average, you know, that the customer, this is not the credit, this is the miles that the customer drove, an average, okay? Because the customer doesn't have the record, the actual record, so you have to come up with an average. So there you go, you have it now. Cool, so 8,640 miles. Well, what do I need that for? Why do I need to know this? You need to know this because the IRS has something called standard, write this down please, standard mileage deduction. Standard mileage deduction. Write it down. Standard mileage deduction covers 3 things. Number 1, it covers miles driven. Number 2, it covers gas expenses. Number 3, it covers depreciation. Okay? So if you want to make sense of this, the more miles you drive, the more gas you spend, the more your car depreciates. Okay, the more you're the more your the more you drive your car, the more gas you spend, the more your car depreciates in value. So the IRS says, hey, I'm going to give you 53.5 cents per mile as a deduction. As a deduction, not as a credit, as a deduction. Okay? 53.5 cents. So let's do simple math. 8640 times 0.535. Then you have 53.5 cents. You have 4,000. So times you have 4,622 with 40 cents. All right, you're gonna have to forgive my twos because my pen is not working very well. There you go. 4,622 with 40 cents. That's what you there's your there is your, let me see if I can write it here better. 4,622 22 with 40 cents, right? There you go. That is your deduction. That is your deduction. 4,622 and 40 cents. Well, what do I need all that for? What do I need it for? Let's go back to the form. I'm going to show you why you need it for. And let me go back to the form. There you are. We are back in the form. So I'm going to answer line 43. When did I place the vehicle in service? I'm going to say that I placed it at the beginning of the year, 01/01/2016. At the beginning of the year. Let's say 17, right? And the IRS is going to ask me, how many business miles did you have? Okay, I have, according to my notes, I have 8,640, right? That was the 8,640. How many miles did you commute? What was your personal miles? 15 plus 25, that is 40. So I have 40 times 6 days a week times 48 weeks. So I had 11,520 miles, right? This is my personal miles, and this is optional. You don't have to write this down. This is optional. Okay. So let me just say this to you here, optional. You don't have to say that, and this is also optional. Okay. This is not required. But the other two, the business miles, are required. So 640 miles. Okay. And then the next question is, was your vehicle available for personal use during business hours? And look at the other questions, 45, 46, 47, and 48. Those are questions that the customer is going to answer, and there's no math in there, right? You just read it and the customer answers it. Do you have evidence to support the deduction? I'm going to say yes. And if you say yes, it's because you do have it, okay? So don't say yes unless you don't have it, okay? So what about the $6,000? What do I write the $6,000? Remember we said 8,640 times 8,640 times 0.53 and a half. What about that? Where do I write these are the miles, right? But where's the expense? Where's the actual deduction? Let's go back to line 9. Okay, line 9. Remember, I told you it's going to transfer itself in the system. It's going to transfer itself, but right now we're going to do it manually. So the 4,622.40 come up here. Okay. So now that means that my total expenses are different now. Remember, I had $11,000. I had $11,000 in expenses. So now I have 11,000 plus 4,622 with 40 cents. So my new expenses are 15,622 with 40 cents, which means that when I do math and I say 41,000, because that's my income on line 7, 41,000 minus 15,000, that leaves me a profit of 25,377 with 60 cents. What does that mean? This is where I'm going to pay taxes, okay? This is where I'm going to pay taxes, not on the 41,000, but on line 29, okay? So 25,377, that's where I'm going to pay taxes.